Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review, and today we're looking at the 5-minute chart of the Emini for Thursday, November 20th, 2025. Whenever there's a big gap going into the day, I always check the Globex chart, so the extended trading hours chart. And I'll check it anyway going into the day, but especially when there's a big gap, I like to see what the market is doing. So huge gap up going into the day, far above the high of the prior bar on the daily chart, far above yesterday's high. So this is the 15-minute Globex chart. And back here, this is yesterday's close. So there's a strong rally right after the market closed yesterday, and then a tight trading range for a lot of bars. And there was a news report at 8:30 Eastern time today, an hour before the market opened, and that's what that big bull bar is. It's always good to be aware of when there's news. Like there was also a lot of high impact news at 10 a.m. this morning. It's always good to be aware that there's news reports that can impact the market, but I personally don't spend any time trying to interpret whether the news is bullish or bearish. I just want to be aware so that I know there could be increased volatility that, if I didn't know about the news, would have been a surprise. So we have this big rally back here, trading range for a lot of bars. Maybe it's a final flag, and then we'll break out. So here's all the information going into the day. So it's not really clear. Is the market breaking out into a new trend? Broke above the high of this trading range, breakout and follow through. Will this remain support, or will the market fall back down into the range? So if we go to the 5-minute chart of the day, talk about the open. The first thing you notice is that the market is far above the moving average, far above all the bars to the left. And the only way bulls can justify buying so far above average is if they have sustained momentum. You know they're not buying value. Bulls buying value are buying when the market is cheap, below the average price. And the market is expensive here, far above the average. So the bulls need momentum. And if the bulls are going to pay far above average, far above the average price, they're looking for far above average bullishness. And tight channel on the open, that's good for the bulls, but a lot of overlapping bars. Inside bar 5, really no strong bull trend bars. Bar 6, a decent trend bar, but bad follow through. This is tight enough for a second leg up, but as far as the location, far above the moving average, it's not ideal. But I think at this point, the market's clearly always in long with the gap up and the follow through buying. There's no bear breakout to look to sell. So it's always in long. Bulls can buy, knowing that if they buy, they may have to scale in lower. But the worst case scenario for the bulls is a trading range. This is probably not going to reverse straight down into an opposite trend, a bear trend. But when you get the surprise bar on bar 8, suddenly we have the biggest trend bar of the day, and it's a bear bar closing basically on its low, and it got follow through. And that's disappointing for the bulls. Remember, the bulls who bought anywhere, but if they bought the close of 6 below, the weak stop order sell 7, suddenly they're trapped into a losing position, so they can scale in lower, and they'll probably look to exit longs and sell back around their original entry price. So somewhere around the highs. The high close or the high of bar 7. A couple legs up on the smaller time frame. So the market did not fall below a major higher low below bar 3. But this is enough selling that it's not a strong bull trend. It's probably a channel or a trading range. And again, it's far above the moving average. So the bulls do not want to see a big bear bar like bar 8 and follow through on 9. So I suspect there are sellers at the low of 7, the close of 6, and a new high of the day. This trend resumption is strong enough for its own, at least small second leg. But I still think the bear breakout on 8 is also going to get a second leg down. And then suddenly, bull bars getting smaller and even smaller at resistance. But a weak stop order sell, double top, but bull micro channel, bad stop order sell, probably buyers below, small second leg up, likely. Now at this point, it's a double top. Again, bulls need momentum. And is this strong momentum? No. Bull breakout bar, bad follow through, couple of dojis. Bull breakout bar, inside bar, past maybe 10 bars have been sideways, big down, big up, lots of overlap. If you're a bull, how long are you going to hold on to a long position this far above the EMA when you have this big bear breakout and probably sellers at the new high? So I said it's probably a trading range or a channel at this point, and either way, bulls are going to sell and take profits at a new high, and bears are also going to sell at a new high, betting they can at least make a scalp down. So strong bear breakout 16. Is it still always in long? We still don't have a bear breakout with consecutive strong bars crossing below the EMA. But as far as context goes, maybe it's 3 legs up. There's a spike break here, so maybe it's leg 1, pull back, leg 2, pull back, leg 3, or simply leg 1, leg 2, double top, reversing down, 16 a strong bar, probably sellers below 16 for a scalp, at least. Bears probably going to get back to this area where they got trapped. But if it's a channel, maybe there's support on the trend line, which is not far below the bar. The bears get follow through and more follow through. That's a problem for the bulls. Bear breakout, pullback, strong second leg down. Does the market have to stop here? There's probably support below bar 1 and the EMA, but it doesn't have to stop here. This looks like strong, sustained selling. Now I think 16 through 18 needs a second leg down. So because of context, probably always in short because of this bear breakout. And then more follow through, finally crossing the EMA. So based on context and price action, always in short, close of 19, probably sell the close, sell above any bar, sell for any reason, strong enough. Bear breakout, second leg down, very likely. This is what you call a freight train. This is a really strong, sustained selling. And Al Brooks talks about the 80% rule. 80% trend reversal attempts are minor and they fail to reverse the trend. They become flags and lead to trend resumption, a continuation of the trend. One of the first things I ever learned when I got into trading was the saying, trend is friend. And that's really true. That's what Al means when he's talking about the 80% rule. Trade with the trend. Is there any reason to buy here? No. It doesn't matter that the high of yesterday is approaching. It's approaching very quickly, and it's not clearly a structure with deep pullbacks, strong buying pressure, several legs down. No, this is one sustained bear breakout leg. This looks like a leg in a trend, and it's probably going to lead to lower prices. Here's also yesterday's close. So I said this is like a freight train or an aircraft carrier on the ocean. It takes a lot to reverse a trend like this. So the first trendline break is probably going to be minor and lead to a trading range, not a major reversal. So this is one of those situations where it's pretty safe to sell for any reason, use a wide stop, be willing to scale in, and you're probably going to make money. First pullback, traders sell it. Strong second leg down. Another strong bear breakout, another leg down, likely. Weak stop order, signal bar 28. Outside down, but now it's 3 legs down. 1 pullback, 2 pullback, 3. It's a parabolic wedge. It's a wedge on a smaller time frame, so it might lead to a minor reversal. But is this a third leg down you want to fade? Probably not in this context, even though it's 3 legs to possible support. There's no buying pressure. The selling is too strong. Market racing quickly lower, maybe to yesterday's low. Finding some support in that area. But still very tight channel. No reason to buy. Tight channel continuing. What about here? 3 or 4 bar micro channel, 5, 6 bars for the bulls. This is an example of where context is really important. This is a pretty strong looking micro channel for the bulls, but context is really bad for buying. After such a strong bear trend, strong tight channel, the first significant trendline break is probably minor. Remember I said you can sell for any reason, use a wide stop, scale in, you're probably going to make money. So as strong as this rally looks, even if a bear sold the low tick, uses a wide stop, and scales in as the market goes against them, worst case scenario is probably a trading range for the bears, not an opposite trend. This is probably not the start of a strong bull trend. It's probably a trading range. Maybe we find resistance at the close of yesterday. Market went straight through the close of yesterday, which is just above here. Maybe this is an implied pullback, spike, pullback, start of the channel. Channel evolves into a trading range. So a couple of reasons to expect some resistance here. Also, 45 is the biggest bull bar in this series of bull bars. It's climactic. If you draw a channel line on the highs of these bull bars, it's breaking above that channel line, more clear on a lower time frame. It's also the first close above the moving average in a lot of bars after such a strong bear trend. This is going to attract selling. All the bulls who are trapped into losing long positions are probably going to use this rally to cover and exit with a smaller loss. And the bears see this as a discount. Strong enough trendline break, it's probably a trading range at this point, so probably support buyers at the low. But trend resumption too strong for the major trend reversal. Bulls hoping it's a bear trend, trendline break, retest, then a double bottom, major trend reversal, but this is too strong. So we've gone to a new low and very little buying pressure on the way. So probably bear channel or a trading range, but not a bull trend. And this looks like it's strong enough for another leg down. So pulling back, but minor reversal. Bears will sell and scale in. 3 legs up, 1, 2, 3 to the moving average. Traders will sell it. Entering a really tight trading range. 66 bull breakout, but late leg, maybe it's leg 4 in an overall trading range or bear channel. So not ideal for buying here. Tight trading range continuing. Breakout to a new low, but a channel line, so downside probably limited. It's also late in the day, not much to do. Trading late in the day, you're just running out of time to manage the trade unless you're willing to hold overnight. And that's where we ended the day. So ended up closing just about on the low. All right, thank you for watching today's end of day review. I hope everyone has a good night, and I'll talk to everybody soon.